Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 13th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 408. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Michael Filighera and Sunny Harris to join us again, and the option professor is back to moderate, so I'm going to turn it over to him.
Sure. Okay, thank you, David, and welcome everybody. Before we get started, let's introduce everyone so we know our speakers. Michael Filighera, do you want to start out by a little background on yourself and what's going on at Logical Signals?
Um, Hi, everybody. I'm Michael Filighera, and a little bit about myself. I have been trading since 1979, so I am that old. And I was an options market maker for a very long time, and I've traded here in San Francisco, the London traded options market, the European Options Exchange in Amsterdam, and the DTB in Germany, and came back to San Francisco and traded again on the Pacific. When everything started to go electronic, I decided that I no longer wanted to deal with all of the volatility in the markets and carrying positions overnight. And so I became a day trader, and then I started Logical Signals, and through Logical Signals, and also Traders Helping Traders, I have a trade room. I also provide coaching, and I also provide a daily update on YouTube that covers the S&P and the NASDAQ.
Sounds perfect. Sunny Harris, again, Money Mentor. Sunny, give us a little update on what's going on at Money Mentor and a quick background on yourself.
Okie doke. I'm a mathematician, trader, programmer, and author of 8 books, including the brand new definitive guide to TradeStation Easy Language and OEL, which that's our long one to say, which is 1,300 pages. I've been a professional trader for 42 years. I love to mentor and consult, and I do one-on-one coaching. I am an easy language programmer and happy to do work for you. Let's see. I write a newsletter every Sunday night called The Sunny Side of the Street, and I do a live trading room on Wednesday mornings at 7 a.m. Pacific. And if you want to go to moneymentor.com, you can find forums on strategy trading, easy language, technical analysis, and more. And with my friend Sam Tennis, I do a live podcast, free podcast.
And of course, at the end, both of you guys will give out some contact information so people can get a hold of you. Let's get right into the markets here because the S&P went up towards this 44.35 neighborhood twice today. And the second time it went up there, there was a real big divergence in the RSI, which meant it was really running out of steam. And now it's down at the 44.11 mark. So let's start out with Sunny here. What you want to put the Sunny bands up and give us an idea of what you're seeing on the S&P?
I'd be happy to do that. Let's get the right screen up there.
Because in the first 2 weeks of the month, we had the majority of the up move. And it's a question whether, it's running out of steam or not.
Huh?
Now, on the 5-day graphs that I was working with, RSI on the first way up was at 80, and the next time we went up there was at 67. And it's turned down pretty much from that neighborhood, and it looks like it's on the defensive as we speak, I think, if the prices are accurate there.
Well, let's see. Let's look at the E-mini. We'll see what the S&P is doing.
Yeah.
Now, this is a daily time frame. You want to see what's really going on, we should stop it on down to maybe 15 minutes.
Well, yeah, something like that, yeah.
Okay. And on this one, you can see some really nice moves today.
Yeah, there was a nice up trade. There was 2 good trades today, one on the upside, one and now on the downside.
Mm-hmm. Zoom always takes all of my bandwidth. So on a 15-minute basis, you can see here this was just straight up. after bar this morning.
Yeah. Yep.
And now here's a quick short trade. But you'll notice on this that the dynamic moving average, the golden purple lines in the center of the bands, are flat. And it even says slope is 5.24 degrees right up here, 505 degrees.
And what does that mean exactly?
That means that I'm measuring the slope of this line, the DMA. When it's flat, price tends to go from the outer band just to the DMA.
Right.
As long as gold's on top and this thing's flat, I'm not expecting it to move any further than about here.
But are we under there now at 44.11?
Right now we're at 44.25. This is the futures contract.
Oh, I get you. So the one I'm looking up there is S&P 500 SPX.
Right, cash.
This is the ES.
Yeah. And that trades at a premium to the cash market.
Right.
I'm with you. I'm with you.
So it looks to me like it's going to go down to about here and then bounce.
That's what it seems to be doing.
That's theoretically what it should be doing. But if I look down on my histogram, I've got a gray line, which tells me that was no movement at all right there, side to side. 2 red lines. Looks like it could go further down because that's about to cross over into purple territory.
And so, that would mean a break of around 44.25 or 44.21 or
44 right here. If we break that, 44, what did I say, 24?
Yeah, about 44.24.
If we break that, we're going on down.
Yeah. And Michael, do you want to opine on what you're seeing here on the S&P?
Sure. Let me go over, bring it back over here and share my screens. Let's do that one. Okay, so let me get rid of these because they're going to get in the way. I was on my monthly. This again is the cash, but which I can do because that's what you were talking before.
So you're talking about SPX right now, just the cash S&P.
Right. And if I would go out to a daily chart and actually, no, you know what? I need to go. I'm going to use, because this is showing my alternate view. And this is the more important one. So I'm going to work off the daily and I'm going to bring this into view this way and discuss this particular move, which was more of a diagonal triangle, if you understand Elliott. And this is the result of that. And so what we finished on an Elliott basis, on my view, was an intermediate first wave down. And that on the bigger picture is going to be working on this larger. This is, I'm going to put that a B back up here, a primary B wave completed at that high. And we're now working on a primary C wave down, which will consist of 5 waves of intermediate degree. I do a lot of talking. So we're finished with intermediate wave 1. It ended up being a leading diagonal triangle. And that's what came down here. And all the internals do match and do fit. I caught a lot of flack because wave 4 overlaps wave 1, but in a diagonal triangle, that's what you expect. Now, so we're getting this incredible rally. And within that incredible rally, we get some support. If we're looking at the advanced decline and we're looking at the breadth of the market, both have been incredibly strong. If we take a look at just the breadth of the market from Friday, it was like, oh my God, it was so impressive. But then when I actually broke it down, it tends to just stick to a small group of very high-tech Titan companies. So again, to try to determine how long that's going to last, I stick back to the Elliott. So if we're in this intermediate wave 2, what's going to happen is we're going to get an A wave up, which I believe we are getting ready to complete. And we still have a little bit more upside to do. If not,
Is that where your 44.57 comes from?
Yes, but that's actually the 100, the daily 100 simple moving averages. but it's actually right underneath it is the fib, and it's 44.47.
Okay.
Ultimate. But more important will be the structure. So I have to go off of the daily and bring it back down to an hourly chart and look at it this way. So what I'm counting again, there's the low, and that's from October the 27th at 41.21. And then the market just decided to launch. And then once we got inside this third wave, it really launched. And then did an irregular 4 because we made a new high over the third down there. And then we launched again on Friday. I think a lot of that had to do with Friday's expiration.
Yeah.
And Jim, you're more familiar than maybe many others, but then we have the 0 DTE options, and they control.
Well, to give you an idea, I was just a sidebar here. There was a 4,400 call that you could have bought for $45. Excuse me, $22, because it was going for about 0.45, and that option went all the way up to about $1,200.
Wow.
So that gives you an idea why people trade, zero DTE options in the first place, because you don't need too many of those hits to be very healthy.
Right. And if you were short, then you do.
Well, if you're short these options, I think you need your head examined, because anybody who's trying to take in $22 and have unlimited risk, they need to go to the doctor.
That's true. And so, but we have all of that in play as well. And that also affects the advanced decline and the breadth of the market, et cetera, et cetera. But on an Elliott basis, I feel that what we're completing is within this intermediate wave 2, there's going to be a minor degree ABC, and we're finishing the A wave. So I think we're going to get a B wave pullback. And that suggests that we're going to start to pull back down all the way to 42.85, maybe 42.50 into this area or zone down here.
I got a quick question for you. That chart formation obviously is a high and then a dip and then another high. And so if we were to take out 44.10, wouldn't that also make that fib number probably pretty valid, and that movement above the fib kind of like an overshoot?
For right now?
In other words, like right now, the fib comes in around 44.11. If this thing started getting under 44.11, it would also break that midpoint of where there's some support, right? And so you're breaking, because on a technical analysis basis, if you make a high, you come down, make a point, go up and try to make a new high, fail at that point, and then take out the reaction point and the fib numbers there as well. There could be some power behind that failure.
Yes.
If we do break 44.11.
Yes, I would agree. And as far as the structure itself, Friday's high was 44.35. Today's high was 44.36.37.
And the divergence I mentioned is right below.
And the divergence is there showing its face. But on an Elliott wave basis, wave 5, which started here, or even in the internal wave 5, did put in a new high above wave 3. So technically it could be done. And then filling in what you just said, this 618 was was resistance on the way up, becomes support on the way back down. So I agree with you. If it's broken, then I'm going to be looking for it to go back below 05 and then head down to 396, which is where the moving averages are sitting. The 100 and the 50 are all there together, 95 and 96. And if that gets broken, we're down. We're headed. We're going to go into this. And I would suspect that we could do it rather quickly, but it's going to be ABC. It's going to be down, up, down, just like this is up, and then we're going to go down, and then we will go back up. So I think on a little bit longer term basis, when we get a C wave going, which brings it all the way back up, we've got a very strong chance of getting to 45.04 to 45.97.
Yeah. And you got the CPI, PPI number this week. You've got retail earnings from everybody from Home Depot to Walmart to Target. And you've got the funding situation by Friday. So there's enough on the docket to make this thing dance, that's for sure.
dance in many different forms, Jim.
Yeah, in many different modes.
Now, just to be clear, because you brought up some very, very strong points, that we do have some important data coming out. We do have, a big meeting between the president of the United States and the prime minister, the premier of
Well, we got that too.
China.
Yeah, we got that too.
We do have a basically dysfunctional government right now that needs to come to an agreement and pass a bill that's going to refund the government for the foreseeable future, and that has to be done by Friday. So there's the alternate to this finishing 5 up would be that it is finishing the entire move.
And the 10-year note went down to 440 and change, and now it's at 460 and change. If that thing goes back towards 5, that could be
I think you bring up another good point, because I've always talked to people and I tell them, it's like, let's put up that 10-year. Yep, it went down, it held a level. This was that had to hold, Jim.
Yeah,
had to hold level.
Yeah.
So there's a strong possibility it did. It bounced. It's getting itself off of that level.
Yeah.
If it continues to go up, then I will label this a B, and it should do a nice C wave and get way above. Now that's a big if.
Yeah.
Because it could just as soon turn and go. And there is a level 106,220. This is the December 10-year note. In my estimation, that has to hold. If it starts to break that level, then we're going below 105.
Yeah.
So
there's a lot going on this week. There's no doubt about it, and we're at a higher end on everything. So it'll be interesting to see. Hey, Sonny, I'd like to see how your Sonny bands are looking at things on maybe even a longer term period. And do you say that there's a potential towards that 4,500 neighborhood that Michael said if things got going?
Oh, yeah, it sure could. I'm looking at a weekly chart. I'll share that. And he always shares the wrong window first. And it's number 5. All right. So this is a weekly chart of the E-mini.
Mm-hmm.
And again, we're sitting on a flat DMA, but the lines, you can barely see them, are below the 0 line, little bitty lines there, which says to me we could go on down on that weekly chart. And if we do, I'm looking at 42.16 on the weekly chart.
So if we do break, and it looks to me from your stuff that I'm seeing that on the SPX that 4411 area looked pretty important. Any of your work shows that as a kind of important too, or?
And that's 4411.
Well, that was on a short-term basis, and like I say, and to be honest with you,
that's where we are right
I'm looking
now.
I'm looking at like a weekly graph, a 5-day graph now, and I've got a moving average coming in around the same neighborhood. So
yeah,
it kind of looks to me like
So it could do 2 things. It could come down to the DMA, which is at 43.87, I think.
Okay, I get that. Yeah.
All right, so it could come down to that level and then bounce if we're strong and go right back up.
Right.
Or it could break this, and if it breaks it on a closing basis, we're going down at least to the lower inner band, if not to the lower outer band. And look at this. We've got a 55 right here that's calling to it, and we've got the 200 right at the lower outer band.
Yeah. And I got on all the different stuff I look at, 1 day, 5 day, 1 month, that stuff, for the shorter term trading. I'm definitely seeing an RSI that's running out of steam, and my experience with that is that if it's running out of steam and you're at an extended level, it's coming back down. But you got to be patient sometimes, because it doesn't come down just because you immediately see it.
Right.
Hey, Jim. Jim. This is actually for all of us. There's just a lot of talk, and it's all about the breadth of the market that we saw last week,
right?
And how that really starts to dictate that we should go more. But I agree with you that what we're starting to see today is a decay in the relative strength, as the failure of the relative strength to keep up with the market and showing a turn. So we're getting that divergence. Could it's from your experience, is there times when the way things trade now and the massive amount of funds that came back into the big tech titan stocks that were not necessarily getting a false reading on market breadth, but kind of a little bit of masked type of where it wasn't as broad as that number was showing?
Well, there's a lot of people who go to advisors, and I think the advisors in the last month have told all their clients that the Fed will be cutting next year. The Fed is done hiking. You've got the all clear signal to put all your money back into stocks. And so I think there's been a huge influx of, larger money who's been sitting out, and shorts, obviously, who had to get out. And then basically, there's been a big influx in there. And it's all based on this idea the Fed is done and rates are going to keep going down. Now, obviously, if that's not the truth, then the repricing must occur. And I'm just wondering out loud, with this kind of blowy off feeling this morning when it was going up, and up, without the relative strength confirming it, if that might be the signal of it kind of having a little bit of a correction. That's the only thing I was thinking.
Yeah, I'm going to stand in agreement with you.
And
I think I had heard that there was like $5.2 trillion sitting on the sidelines, massive amounts of capital sitting on the sidelines waiting. And so, just as you said, if they were going to their asset managers and they were saying, hey, this is what we're now hearing, that the Fed's done, et cetera, et cetera, et cetera, and we see a big chunk of that come flying right back in.
The other thing I always think, and you being a market maker, you'll understand this, I'm always thinking, if everyone is buying or everyone is selling, who's on the other side of the trade? And so my feeling on market makers is they look at the volume coming in, and then they say to themselves, I'm going to be stepping in front of this with my checkbook. I'm going to raise the offer price to a level that I know that if I get all this volume done, and there's not enough volume behind it, that's why the relative strength is kind of telling us the volume drying up. If that is the case, then it will fall under its own weight, because you cannot keep 4,450 on the S&P up with the volume drying up, because all these people that bought or longs, they're going to want to start selling, and the market maker will do the same opposite thing. If everyone starts selling, he'll drop the offer way down. So
and also it's the premium game, as you just mentioned.
Yeah.
They're gonna mark up where they're gonna offer is now going to be higher. And it's that's their insurance, but it's also the premium. And as long as they can sell premium, which they did in bucket loads on Friday.
That had to be a lot to do with that expiration, because I mean, when you see options going from $22, I mean, if when an option's going for $22 and you buy 1,000 of them, you put up 22 grand. And if they go to $1,200 a piece, just to put this in perspective,
it's a lot.
They go up to $1.2 million. So somebody could have put up 22 grand on Friday in the morning and went home with $1.2 million.
Well, I guarantee you that they went home with probably $10 million too.
Yeah, that's what I'm saying.
Very big.
But I'm sure that was the market makers doing that.
Yeah, exactly. I agree.
And these people who try to get the last bit of juice out of the orange, and then they go, well, I don't want to cover it. It expires in an hour. The next thing you know, the S&P is of 67 and the option's gone from 22 grand up to 1.2 million. You know what I mean?
Right. And the other thing I think people need to understand, it's like that if the market makers are really in control and the gamma flow, right? This is something you understand, Jim, because you trade options. Mm-hmm. The gamma flow is so important right now that if they're starting to run that, what it's doing is like who's ever short that option is getting squeezed beyond their wildest dream, and they must react. And if you're getting shorter as it goes up, you're just buying. So that goes against also the dealers that were selling that premium, but not delta neutral trading.
Right. They had no offsetting hedge.
Yes, and they did it wrong. And then they get caught, and then they're covering their butt as it continues to run higher. And then once it stops, then whoever's out there to monetize has done so, and now it starts to come back the other way, and you're left holding the bag, and now you got to sell.
Yeah, and I also think that they have to have some legitimacy, so they opened it up today just to show that there's a little bit of strength there, and it wasn't just a total scam running it up on Friday. And then, of course, now I think with the divergence in the RSI, plus what happened on Friday, plus how far we are from some of these moving averages, reversion to the mean makes an awful lot of sense.
Makes an awful lot of sense. Yeah. Absolutely agree.
All right, let's not just talk about stocks, because I'd like to get into some of this other stuff before we run out of time. Let's get into the price of oil. Oil has had a big drop, and I think it went into some major league support down here. And I'm just wondering, there's two markets that I'm wondering, are they done, or is this the calm before the storm? The first one we're talking about is oil. Is oil stick a fork in it, or is it a situation where it's the calm before the storm? Because Buffett is adding and adding to, I guess, this Oxy Petroleum, and there's these oil stocks are starting to get a little bit of a bid today. Let's look at crude real quick and see what do you see, Sonny?
I've got a sell signal right over here with this vertical line. That's the Sunny Band sell signal. We've been short this whole time. Right here is a Sunny Band's buy signal and a confirmation. So I switched to
so you're saying we hit some big support, as I thought we did on Friday, right? Yeah.
So two blue candles, one of them inside the lower outer band, tells me it's a buy. Now, purple's on top on the DMA, which tells me also that we're likely only to go to right here, which is 82.02.
Yeah, 82.02. Yeah, on my shorter term stuff, I have some resistance around 79. And then, I got something going on around 82 as well. Yeah. So 79 to 82, we're not that far from it. So this could be ultimately a dead cat bounce. But, let's look at XLE, XOP, and those guys.
Oh, God.
I wanted to talk to you. We're going into a couple of different stocks that I just saw. We'll get to a second. So XLE.
Buy signal on this too.
Yeah. And I'm trying to see.
That's the buy, and probably only up to 86.34 on this one.
Yeah, that's exactly the number. I got 86.45. That's pretty darn close. Yeah. And there's a gap there. I got a gap on my graph here from just under 85 to just above 85.
Oh, we've got this one over here.
I guess, yeah. It was the gap I've got is the low of 85.45 on November 6th, and the high point on the 7th, and that is coming in at 84.73. So somewhere in that little window, I have a little bit of a window on my graph. I don't know if it's accurate, but it looks like it.
Yep.
Well, so sometimes that's an attractor, right?
Anything can be an attractor. If it tends to pull price to it, it's an attractor.
Again, this is also a candidate for the reversion to the mean, because the things come from 94 down to 82 on this XLA, and these companies are making a lot of money, and they are buying back stock, and they're doing all kinds of wonderful things.
Well, I think we're going up to 85.93.
How about XOP?
What's that one?
I think that is, let's see what it is.
Staples.
I thought XOP was another oil one. Yeah, it's oil and gas exploration and producing. So it's a little different version of the same thing, I guess.
No, XLP is
XOP, like X-ray, Oscar, Peter.
Oh, no wonder it didn't read like you said.
Oh, now it says oil and gas.
We got the same signal on this one. And it's heading up to the DMA. So we're going to go up to right there. 112 and change.
Now, the one that seems a little stronger is OIH, which half of it or something, or a lot of it is Halliburton and Schlumberger. So this is more like your oil servicing, drillers and that kind of stuff. Is that a little bit better looking?
It is. It's already headed to the DMA. See how close it's getting?
Yeah.
So 327.43 is my expectation on that, and it's currently at 321 something.
Yeah, most of the moving averages on this stuff, to be frank, are pointing down, particularly on the 1 year and stuff like that. So they have, shall we say, wood to chop. But on the longer term graphs, they have been kind of an uptrending overall deal. Still kind of in a stalling corrective mode, but
Yeah, we're just stalling on this weekly chart on this one.
yeah.
See, the DMA is flat all across here.
Looking at one that's in the news a little bit as possibly, into maybe a potential takeover for somebody, or they're going to do something, Devon Energy, DVN. But that thing just doesn't seem to be able to hold above $50 very well.
Yeah. And that's a weekly chart of this one.
Yeah. It's hard to get excited when all the lines are not under your price, huh? Because the likelihood you're going on this huge run up is pretty low unless all those lines are under your price.
Yeah, well, this little skinny move does have a downslope to it. See how that purple line is not going straight across? It just goes a little more down. It's just edging down.
Well, they were also saying that the strategic oil reserves are going to reload down here. So that's a supportive thing for oil down here, right?
Mm-hmm.
Because the depleting, this is the range they're supposed to be buying. If they don't, they end up kind of buying at a higher price. Michael, we're going to talk about gold, but I'm going to give you first bite at it. So put up your gold stuff and let's see how you think things are going. Because my tune on gold is as simple as this: is that RSI on the longer term graphs does not get above 60. And if we can't get through 60 into the 70s, we're not going to have that big acceleration phase. And we've had a number of run-ups towards 2075 in the last year or two, and they've all failed. And we just had another one up there kind of fail. And I'm just wondering, is it a situation where if we get back above 1985 and we get above 2000 and that RSI can zoom through 60, maybe we could go to 2300 between now and next year.
Right.
But other than that, it's meandering at this point, right?
I'm having trouble getting my screen up for some reason. New share. I wanted to get up to the gold chart, and it's not showing me that window. No, these are all NinjaTrader. And this one that I wanted to show me is not. So I'm not sure. Oh, there. Let me go like this.
There you go. That's XLE anyway.
Oh, yeah, that's because what I had up there. I was wondering, why is it not showing me? Gold, by the way, is a gigantic disappointment to me.
Well, it just can't get that RSI, that relative strength to go through that number that it needs to accelerate. Because the last time it really ran up back in 2020, the RSI went to 83. All these other peaks after that, RSI petered out at 60.
Yeah, and this one petered out at 70.
Yeah.
So, but
I'm looking at a monthly. I was looking at a monthly graph. Yeah.
I am still, let me go up to the weekly so we can see the triangle. I'm still like, okay, that it put in a triangle pattern here for a fourth wave, and that we're starting in the fifth. And it's just a much longer term rally. And what I think this thing gets all caught up in is that, when the conflict in the Middle East started and interest rates were, they were knocking things down, we had this run to quality or this safety deal going on. And I think that gave us the move that we got. But if I'm looking at my daily chart, I can think like 1, 2, 3, 4, 5, wave 1. And this is turning into, it probably is, let me just drop down one and look at this. It could be an ABC, which would be good, because then what it would be is 1, 2, and we're getting ready to launch again.
Yeah, this long-term graph I have, the 12 SMA has made a higher high than it ever has in the last 20 years. I'm thinking out loud that might be tipping my hand that this thing is going to break out to the upside in a
Yeah.
big way because of the RSI making a higher high, and it's at 1926. So if you want to know my line in the sand, that's my line in the sand, 1926. As long as it keeps staying above that, and that average keeps going higher, and if we can ever get this RSI out of the mid 50s, higher 50s into 62, 63, 67, then the explosion through 2100, and if you measure the sideness, the width of the basic consolidation between 2000 and 1700 that it's been in, I mean, maybe you could measure that and add to the top, and maybe that'll give you a little bit of a target up there if it can do that.
Well, I am measuring in terms of for the fifth wave, and right now, the equality where wave 5 would be equal to wave 1. That's the measurement. And let me show you the extent of where this all comes. I have to go way out to go there. I'm going all the way back to 2016 to look at this is the start. This is the first wave out of the 5 that it's working on.
Yeah.
Wave 4 was long, arduous, and just really complex.
Yeah.
But if I label that, I do my fibs and run them over to here. So the equality comes in, and equality is that 100% number at 2061. But that's the most common. Now, beyond that, this 618, I need to just take it off. It's already been exceeded. And it really is not support. So because because the measurement is different, I wouldn't use it as support. So I'm going to take that off, use the moving averages, which is where I would have gone anyway.
Yeah.
And so that's right. I agree with you on what you're saying about that bottom and what it needs to hold. And that's pretty much right where it got 36, 35. Don't go too far below. So I think 2061, but I think this is the more realistic. If that's exceeded, that's next up. And we're already looking for it to come out and break that high. And this is contract adjusted, right? So this is showing the December contract hit 2215. But if I go out to a weekly chart, you're going to see that number is 2089.
I tell you, put up Harmony Gold HMY, because when you buy stuff under $5, it's kind of like buying an option, in that you can only lose the $5. I did this with a Freeport McMoran when it was at $10. And so if you do a long-term graph on this thing, can you do there you go, something like that, or 20 even. It seems like it's trying. If you go back 20 years, you get a better idea of where this thing, jumped to in the past. And, if gold were to take off, do you get the feeling this thing is leaning to the upside a little bit?
A little bit, Jim, but
just a little bit. And like I say, if there was a big move in gold, I would be very surprised this thing didn't go up 2 or 3 times in price.
Yeah, what it seems to do is it does a strong up, and then it spends the next month or two
back
waffling. But now it just made another little strong up.
Yeah,
which would have been a week of the 16th of October, and it's just waffling around.
Yeah.
So yeah,
but it's above a number of the moving averages, which is constructive.
It certainly is. On the weekly, it's above all of them. And I'm using simple now. Yeah. Exponential are there, but I'm just using simple because that's the mostly watched.
Yeah. And like I say, when you're getting stuff at $4 or something like that, you can only lose $4, right?
I agree. But here you got.
If you buy a stock that goes for 300, you'll lose $4 before you get back to your car.
So you could put your downtrend line in there, and you could see came up, touched it, back off. So you're right. What it's got to break is 525.
Yeah, and you have to have constructive moves in gold.
And if you do the trend line from the lows,
I can.
Well, no, over to your right lows, not the lowest low. Yeah. The one before that, if you draw a trend line, you've got a nice pennant formation. That works too. So when it does break out, it's going to be explosive. One way.
That's what I was thinking. You know what I mean? So I picked up some shares of this thing, but I didn't go in heavy. But if it broke out above I definitely would add to it. And then, of course, if it doesn't behave, staying above $4, I probably would get on the Alumni Association.
Well, yeah, but you could, in other words, it's like just going with that trade.
Yeah.
It breaks, you join the party. Your stop is right there.
Right.
Or
Your
you just
stop is
say,
just at
listen,
that
or you
lower
just say,
level.
I have a position in this gold stock for the rest of my life, and I'm going to forget about it, that kind of thing.
You can do
Or
that.
you could. You're
Yeah.
right. But if you were
Because
more
believe me,
cautious,
putting away the Freeport McMoran for a while when it was at $5 and $10 was the way to go. It ran all the way up to like 50.
Harmony Gold, obviously it's an ADR, so I'm not sure where it trades. But isn't this a newer mine?
Well, it goes back pretty far. I got it going back to 07.
Oh, okay. Well, 2007.
Yeah. And
Usually in
and that's
times,
yeah.
usually in times of strife, you'll see the migration towards oil, towards gold.
Yeah.
But this time it's going into Bitcoin.
No, it is totally going to Bitcoin because they say the new generation views Bitcoin as a store of value with more usage than the gold.
Mm-hmm.
So that's basically the story on why Bitcoin's getting a lot of the
Yeah, it's just been going straight up.
inflation hedge because there's a whole generation who is very familiar with Bitcoin and also believes obviously it's a little bit more of a
Yeah, I agree. I agree with
I
that
also
statement.
think that it's the currency for war now.
yeah. In other words, they're not going to bring they're going to bring Krugerrands down to the down to the store, but people do accept Bitcoin for payment.
Mm-hmm.
Oh, did any of you see the story about Costco selling gold bars from a few weeks ago?
Yes, I did.
No.
No, I did. I did see that. I heard of that. Yeah.
Yeah, it wasn't it
I
that
have
they
not
like
actually investigated it, but I did hear about it.
I didn't look too closely at it, but I think it was something like Costco started selling gold bars and they sold out like on the first day or something like that of whatever stock they had.
I
Wow.
did see a furniture company did something that was kind of interesting. RC Willie is saying that they used to charge a flat $3 if you use your credit card, and now they're going to be going to almost like 3% on top of your sale, or you can pay with other methods. So I'm wondering because I've seen a lot of people, a lot of vendors, because I've been doing some business with vendors, and they really are, if you pay by check or Zelle or something like that, we can save you 3% or 5% because these credit card companies are really sticking it to the vendors now, and the vendors, they're either going to charge you more, which is inflationary, or they're going to circumvent it by telling you to pay a different way.
I found the story on Costco on gold. It says Costco selling 1 ounce gold Sweet Lady Fortuna bars. So they're 1 ounce bars, as opposed to a Krugerrand, which is an ounce in a coin.
Right. So they're selling 1 troy ounce bars, and did they put a price on it?
No, it fluctuates. Right now it's up $2.15. I can't tell.
Did it say anything about like how many they sold or?
It says they sold out. They go within hours. They're all gone, no matter how many they bring in.
Well,
Costco. So you're obviously they're getting it at a discount, or people think they're getting it at a discount.
Right, probably.
So they just go, oh, it's Costco, so I'm going to do it. But Jim, I want to get your opinion here on our friend silver, which just is like, excuse my language, the bastard stepchild here.
Yeah.
It cannot catch an upswing, but yet I'm reading that a lot of firms are now recommending silver. A lot of firms are expecting silver to go through the roof. And I'm like, really?
Well, see, to be honest with you, on silver, when it breaks $26, give me a call because at that point it's going to fly. But until then, it's another meandering.
It is definitely meandering, but it continues to really show me that it is corrective. And I'm thought, along with gold, it seems to have done 5, and now it's doing a very complex, but still a corrective decline. It held a level that it likely was needed.
Yeah, you need to stay around that 22 to 20. You don't want anything, certainly you don't want anything under 20, but definitely 22 is a nice number. Is that about a Fibonacci pullback from 2090 up to 2371? And Is that about a 60% pullback or so, or a little bit less?
Look, take a look. Just do some fibs. It was.
There you go. So you got the fib pullback. You've got yeah. So in other words, if it starts taking off, but you can see from your graph, it has been kind of having a tough time at 26. And if you go to like a 20-year graph, you can see that there's nothing but open real estate if it can get above that other area.
Oh, yeah. So again, I mean, I have silver bars, but that's just because you pick them up and you put them in the drawer,
Yeah.
And I'm not giving out my address.
And on the longer term graph on silver, it's pretty much, trying to definitely held the 20 number, which was real important. And now, again, it really in the short run needs to get above that 2350 area, huh?
Yes. Oh my God. Yeah.
So initial hit would be 2350, and then reload at 26 and change, and then you might be on your way to 30 or 35.
But it's not the industrial metal that it once was when we were doing photography with silver plates,
right?
Silver film.
You know what they're saying? The demand for silver is going to pick up because of that. There's now been replaced and it's being used in solar panel
and batteries, maybe.
And yeah.
Batteries. Very interesting.
Here's another little one we just did. We did the same thing over there.
Mm-hmm. Yeah,
there it is.
Let's swing over to the international markets real quick, because FXI, and let's see how some of these internationals look, because the valuations in these other countries are way different than ours, and we can look at China and we'll look at some of the other nations and see if there's a value there.
Well, Jim, this got put up in the last time you and I did a show. I don't do anything on FXI, so this has to be, what we put up in terms of looking for a bounce. And
it's still fighting a big downtrend, huh?
Yep.
Yeah.
Going down.
One Chinese stock I did take a little shot at here, DI, because I made good money on it the first time it ran up. So of course it's my old friend. And then it just made a turn here recently. This is This is like the Uber of China.
What's the symbol?
Take a look and see if you see any value to this thing. DI, DD. There you go, DD.
What is it again?
It's the ride-sharing company over in China.
DI.
Yeah, I bought it when it was at $1.50 because I assumed when they got out of their apartment, somebody needed a ride.
Oh, gee.
That was a very good. By the way, that was a very good assumption. It was another one where you pay $1.50, you can only lose $1.50, right?
Yeah.
Actually, it's not.
I didn't get the idea.
It's a DIY if you want to get the actual thing up there now. Yeah, put a Y up there. There you go.
There you go. Oh boy, look at that. Hate it, love it.
Yeah. But if you put on like a 1 month graph, can you put a 1 month up there?
I can.
You can see that it's back on the bicycle a little bit.
Oh, wow.
Yeah. So again, once it got above like the 320, it started to look like something you could take another shot at. And today it's getting some acceleration.
This is the one where they reported the news. DD is up 6%, which is nothing more than 20 cents.
But it had a good time of it when they first came out of lockup. It went from like $1.50 up to $5. And then their reopening faded, right? And so it came back down to $2.50. And now it looks like they're stimulating that thing. And they're trying to get their consumers moving around. So I don't know if it's on its way back to $5, but it definitely has it's got a lift here going today anyway. Something to keep an eye on, maybe.
I just want to bring it out here a little bit. Let's put it down on a smaller chart. Open it up. We have reached a low. We held the 15-minute 20, and we're now cruising back towards the highs in the S&P.
Yeah, it held at 44.10. You see that 44.10?
It held at 44.20.
Yeah.
It surely did held that 44.10.
Yeah, but that was the neighborhood. So if you, like I say, if you were going to be a buyer, you would buy against that support. You know, when you start doing stuff after the fact, it's always more risky. You know?
It is. But being a day trader, I mean, like, I would have bought it.
Yeah. But that 44.10 was a nice place where you could have bought it and then like had a very small risk to it, you know.
Right. But even if I take it down and even look at it, my 5-minute chart, I got signals. It held the 100, it held the 50. When it went back above that 50, it accelerated.
Yeah, good stuff.
So, and
hey, let's look at a couple more real quick. Let's look at Mexico. EWW.
EWW?
Uh-huh. These are ETFs.
EU?
EDFs, yeah.
Mexico.
Yeah, that's back on the bicycle a little bit, huh?
On the 5-minute chart. How big?
Oh, okay. Let's go longer term.
There's a daily.
Okay. Well, it's just really coming back to some resistance.
Nice gap.
Yeah.
And that's a pennant formation on top of a flagpole, which typically resolves in the direction of the pole.
Which is up?
Yep.
And let's go to Brazil, EWZ.
As soon as my machine will do it. What was the
EWZ? Edward William Zebra.
Yeah, I put in the wrong one. That's okay. Yappy thing. This thing is. There you have it there. You want a bigger?
Let's go to a little bit longer term.
There's 10 years.
Yeah. See, like I say, if these things can get going, there would be quite a bit of potential to some of these, you know. 32 back up towards the high is a pretty good run.
But even if I'm doing it here and I just kind of start filling in these lines, these are like, you know.
And go from that to the next one down.
From here?
No, from the midpoint of the red trend line you drew. I'll drop that one. That's good. Now go back up to there. Yep. And pull another trend line down.
Here.
Across this top here. Yep. There you go.
And what does India look like? INDA.
A little better.
Hey, listen, Apple's over there putting all kinds of money to try to sell them the iPhone. So, and they got 9 trillion people over there. So, you know, if you can monetize those people, that'd be something else.
A little bit less than 9 trillion, but you were close.
How about small caps? IWM.
I love it. Now you're talking my language. Mm-hmm. Now here's one that it is actually, in my view, leading the game. Let me go to a more sensible 4-hour chart. This thing did this beautiful triangle, came tumbling out of the triangle, has done 5 waves down, finished it, working on an ABC. And in fact, I'm just going to open it up from here. Here we got the A. Now it looks like we might be finished the B, and we probably get a C wave, which will go up and take out 175. And that would be, but the other side of the coin is, we have the possibility that if they don't like numbers this week, this is just a tiny little correction with a pop, and it drops and it cuts down to 164.
I'm voting for that one.
Yeah, well, I mean, like, no,
that's where it looks like it's going.
You know, don't you sometimes get to the point where you realize that if your moving averages and stuff are not under the price and rising, the likelihood you're going to be making a big hit on something is pretty low.
Yep.
You know, and everything else is really conversation at that point.
Yes. There you go. I agree.
And so there's not that many that have, not that many that have total uptrends to them. So when you do find them, it's nice to get a few of those in the old.
Well, I think this would just be an ABC, and then we got another major slide. This is we've only done intermediate wave 1 out of 5. So this is going to be wave 2 out of, again, the 5. The next
you may have something to the reversion to the mean trade, though, because I've got moving averages at 180 and 185 and even as high as like 195. So when you go down to 160 neighborhood.
And on a daily, on your daily, there they are. Yeah. And I think on the daily that the C wave, that's exactly where I think.
You know, bouncing out of the 160 neighborhood is not exactly a tall task, you know.
Well, I think it's like in terms of it gets down there, we still can rally and we still can get up to that 180 number. I mean, we're going into year end. We're going into we all think that this was just the start of them trying to say, hey, we're moving into year end. I don't necessarily agree with that. But as we get closer, as we get through this CPI and all the rest of the stuff, and we have NVIDIA next week, you know, it's like, what's to stop this thing from just, okay, pulls in here and then boom, and still ends up back at that 180, because you're right, there's your markers. So I'm just up to the daily chart. That's just a daily.
This could be a deal where November is the Santa Claus rally, and the Santa Claus rally is coal in your stocking.
Yeah.
Because
Okay.
we're obviously we're using a certain amount of buying power to get it up like this, right?
Yes. Yes. I agree.
And this Microsoft, I just made an all-time new high.
Yeah, it
I
did.
mean, like I say, you can't. But the relative strength compared to when it made a high back in 2021 is still lagging dramatically. We were at 81 back in 2021, and we're still in the 60s here as it's making new highs. So it'd be interesting to see. They definitely, obviously, are migrating to big stocks. They feel like that have moats around their business and are generally monopolies, and so that's where they're going, because they're saying, hey, these guys are monopolies. If life's going to go on, you have to use these companies. So just buy all these companies.
Yeah.
And there's obviously some truth to that.
Yeah, and and Bill Gates be wrong.
In other words, you're gonna do search, you're going to Google. If you're going to do social media, you're going to Meta. If you're going to buy an iPhone, you're going to go to Apple. You're doing the computer stuff and the AI stuff, Microsoft. You know what I mean?
Right. Right.
If you need chips, you're going to go to NVIDIA. So, I mean, there is some truth to the monopolies, which they are. They just
those are the stocks I'm holding.
And then, of course, Amazon. If you're going to buy something, you're
Yeah,
going to use Amazon.
at Amazon.
So, yeah. All right. Well, we're near the top of the hour. Let's give some identification on how they can get a hold of you and what you're going to give them. So let's start out with Sunny. How do you get a hold of you? And also, do you have any special offers?
Oh, I'm easy to get a hold of. My phone number is 760-908-3070. You can text me at that, or you can call me. It's my cell phone. Let's see. My email address is sunny, SUNNY, at moneymentor.com. And that's my website, moneymentor.com. So if you forget the phone number, it's right on top of the website.
Sounds good. Michael, how about yourself?
Again, Michael Filighera, and you can get a hold of me by Michael at MJF, the number one.
The time is 11 o'clock a.m.
Oh my God. Michael at MJF, the number one partners.com. I always answer my emails. If you wanted to check out my work, you can find it on YouTube and look under Traders Helping Traders, and then my name. And there are well over 1,000 videos. And I do one every day on the NASDAQ and the S&P. And then once a week, I do a podcast, which I cover the big technical pictures and treasuries and everything else. So, yeah.
Excellent. As far as Option Professor is concerned, I'm Jim, the Option Professor, and you can go to optionprofessor.com and put your information in, and I can send you a link to the indicators that I use when I make my own decisions in the market. And I also combine that with a 1-hour online meeting where I explain how I interpret the indicators, and we review stuff that you've got and see how they shape up going through what I look at. So it's very helpful. A lot of people have found it very good. So optionprofessor.com, and we'll get that done for you. All right. Thank you, Sonny. Thank you, Michael. And again, a big week ahead of not only retail sales news, but also CPI news, and she's coming to town, and the government's going to shut down Friday. So, hold on to your hat. Right? All right, David, back to you. Put your seatbelt on.
All right. Yeah. Thanks, everyone. All right. Yeah. So, it's been a few weeks since we've done a live show. So that's good to get back to a great discussion here. Lots of good info. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or Substack or your favorite podcast app. And you can also just go to TimingResearch.com to get access to this show as soon as I can post it, as well as any of the past shows and presentations. And I just want to thank my guests again for today. Michael Filighera of logicalsignals.com and tradershelpingtraders.com, and Sonny Harris of moneymentor.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you.
Thanks, David.
Thanks, Jim.